What's up, everybody? I wanted to hop on here. I know I haven't done too many videos recently, but I wanted to hop on and show you the indicator that I created um, based on candle analysis. So, if any of you know, like Al Brooks, he's really big on like bar by bar and just reading the candles, whether they break the high or the low, whether they're trending up, down, things like that. So, what I wanted to do to help myself out with that for entries is create an indicator that colors the candles based on how they're trending. So I created this indicator called Van's Bars right here. There's only four settings, so these are the default settings. You got your green bars. These are bull trend bars. So these are going to be bars that either close above the previous bar, so that'll make it green. Or if say you break above the previous bar and close above the open of the current candle, that'll also be green. So that shows basically a candle that's making a higher high. And the low of that candle also needs to be above the low of the previous. So it's basically showing a higher high and higher low in terms of trend based on the candle, high and low, and open as well. The red is just the opposite. So these are going to be any candles that close beneath the previous bar. So if you close below the previous bar, you're red. Okay. Or if you break the previous low and then close below the open. Let me see if I can show you something like that. Let's see. So you don't have to necessarily close below the previous. You just need to break the low of it. Shit, where's a good example? Oh, so like right here. So this candle's red because we broke the previous low. We're making a lower high and a lower low. So it is a red trend bar because this shows a trend in terms of highs and lows as being down. Okay. The blue bar is a failure bar. So this is an outside bar. So this is going to show you a candle that breaks the previous high or low and then closes. So if it breaks the low, then it closes green. It is a failure to go lower, and it's showing like a bullish failure to go lower. If it breaks the high and then closes red, so if I take this off, so see, you broke the high of this candle and then you closed red, that's going to mark it as blue as well. So that is a failure to go higher or failure to go lower. This also includes any outside bars. So let me see if I can find an outside bar here. So these are going to be candles that break the previous high and low. This one, oh, not quite. But even if this like broke up high and below, this is going to be a blue bar. Whether it closes green or red, it doesn't matter because it's an outside bar. So it failed to go higher, failed to go lower, and then closes inside the previous candle. Because if it closed outside, it would be red or green, right? So, and then the last one is white, and these are inside bars. So usually an inside bar is mostly continuation. It could be part of a reversal pattern, but that's typically rare. I mean, you can have ones that we run up, we rally, and then you base out on an inside bar like a white, and then the break of the low drops us down. So that is possible, but usually an inside bar doesn't tell you any more about the trend, and these are just trending candles. So you can change the colors to whichever ones you want. Um, I just like the default is pretty easy to see. And then you're just waiting for signals at levels. So for example, today we had levels at 607, right? Here's the opening print. We push up above the level, we base out. This is a rally base, and usually what comes after there's a drop or a rally. So once you get the break of the high of this basing candle, you would want to take a long into the next level because you're getting your rally base rally. So that's a simple one here. Also another one, rally inside bar basing candle, take the break of the high, up to the next level or so. That's that. Super, super simple. Usually, though, this is more for pullbacks and reversals. So, what you're going to want to see on a reverse or on a pullback, you want a trend to happen, okay? So, you want there to be a trending day. So, if it's just choppy, you're going to see a lot of blue and white candles back to back. Let me see if I can find a good example of that. I think yesterday on maybe the 15-minute was a good example. Kind of here when we ran, up yesterday, and then we started just chopping. So you have like a failure to go higher, failure to go lower and higher, lower low, lower high, failure to go higher. So this was just pure chop. So this you wouldn't want to trade, right? So that's my cat. Hi, bug. So, but you want this to happen on a trending day. So today we do have a trending day. Perfect example. So you get your 5-minute trend bars to the upside, right? You're making higher highs, higher lows. You're closing above the previous candle every time. So normally I usually use this on either the 5-minute or the 3-minute because this is a little more for like getting those early entries. So for example, you get your rally base. Now you rally again into the level. You break above the level, and now you're pulling back to the level. So this is what we want. So we want to see a red bar on the pullback or multiple red bars on pullbacks. And then we want to see either a blue or a green candle form to help us go long. So you get this first blue candle, right? Now, this broke the previous high. It was a failure to go higher of here, but that's not what we really want. On a pullback, you want to see, or on a pullback in a bull trend, you want to see a failure to go lower. So you want to see this fail to the bottom side, right? Now, this is also an inverse hammer at the level, so that might tell you something that might make you look long. Those are like my favorite candles to go long on. But so this doesn't tell you anything. And then you have this candle here. This is a blue candle. Notice that this failed to break the low. So this broke the low of the two previous candles and failed to go lower and then closed green. It's blue because it closed green. Okay. Now, that is a failure to go lower on a pullback at a level. So what we'd want to do is long the break of this candle once price breaks above this candle. And that would be our entry with your stop under the low of this candle. So you wouldn't get in right when this bar forms. You're waiting. So this is your signal bar, okay? So you wait for the signal bar to fully close, and then you're taking either a long or short above it based on if it actually gives you a signal. So this is giving you a signal, pullback, failure to go lower, signaling that we may possibly reverse here to the upside because we're in an uptrend. So you would take the break of this long right here around 12, 7, 16 or so, stop under the low, and then you would ride that to the next level. And it works out really well. Notice again here, it happens again. You run up, you get your red bar, even though it's only a single red bar, so it's not, it's just a small minor pullback, but it still works. And you pull back to your level, right? You get a failure to go lower here on a volume spike, higher volume, right? So that looks good because if this starts breaking down, then we're failing this level. So it makes sense that you would put your stop under here, you long the high or the break of the high of this signal candle. This is your entry candle. You're getting long on this candle as it forms. When you wait, and also when you wait for the breaks, you're getting in as it breaks. You're not waiting for this candle to close because you're missing out on, a ton of profit and a ton of points. And then your stop would be massive, right? You want this to be just a single candle stop loss on the 3 or the 5-minute. So you get your red bar pullback, you get your failure to go lower here. Now you long the high, you put your stop under the low, and then you look to target the next level, which happens, just a few candles later. Now on a reversal pattern, you would look for either a failure to go higher, like a blue, or even a red bar to engulf or show a reversal at a level. So this is a pretty good example. Even though you're in an uptrend, these are much better to take with trend trades. If you're looking for reversal patterns, you're better off waiting for like a double top or like maybe like a failed breakout, kind of like this one here after we've run up so much. I think that's a better entry for a reversal. But either way, you can take the signals as they come. So here's another one where you get to a level, right? So this is your 12,854 level. You get a massive red engulfing bar that engulfs one, two, three, almost four previous bars. So that's really strong. So you would want to short that candle once the next candle breaks the low of it. So you'd short it here, put a stop above the high, and then since this is counter trend, you would just target, I think a single level previously. And so you would short down to there. You're getting, what is that? About 50 points on NQ. So let's see if I can show you another example here. So like here's a good example too. This was earnings after yesterday, but another good example. You get your run up. Granted, I think there was a level right here, but definitely only look for these at levels. Okay, simple, simple, and go with the trend. If you're trending up, look for pullbacks at levels to get long. If you're trending down, look for pullbacks at levels to get short. Don't chase a bunch of green candles in a row. Wait for the pullback. So we're trending down here, right? You get your green candles on the pullback. Now you get your blue bar here, which is a failure to go higher. We broke the highs, closed near the lows. So this is a very clear short. Once price breaks below that blue candle right here, you short it, your stop would be above the high, and then you would target levels below. So I want to show an example of like when this doesn't work or when you get a signal bar that forms, but you don't get the trigger, you don't get the break, so you're not in a long. So, like yesterday, we're trending up, trending up, trending up, right? And then we get a big sell off into a level right here. Okay, so once the level hits, since we're in an uptrend, you may be looking for longs, right? So you're waiting for a green bar or a blue bar to print to get long, right? So notice you're trending down, 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 down. You don't even get any green or any blue in this whole trend. So this is a really strong trend, right? Now you get your first blue bar to print. Perfect. Now we're looking long, right? But notice the next candle does not break the high. This candle does not, this white candle is an inside bar. It does not break the previous bar's high, so you would not get long. Okay. Now, if this next candle down here maybe broke it, that might be fine to take. But if you start trending down again, then you want a new bar to be your long bar. So once this started to break the lows of the blue bar, then I'm looking for a new signal bar to get long. So you get this green bar printing, right? Okay, so that's right at the level as well. It looks like it's an engulfing bar. And the blue bar, it looks okay, so it does break by a tick, right? So if you really put your trade in like right there, like you put a buy stop just literally one tick above, then you would be in. If you're just waiting for the bar, you're waiting to see it actually break and show like some strength, you probably wouldn't be in here because I don't know if you'd be fast enough or you'd be able to really see that, this actually broke. So again, to me, this wouldn't be a trigger long because you broke by like a tick or so and then you drop down. I want to see like an actual break. I want to see this start breaking above and then I'm in and then my stop's under the low. Okay, so again, this wouldn't be an entry. Now here you get another blue bar, right? Now this one does break the highs. So you could have longed this, your stop would be under the low, but you would have been stopped out, right? So, and that's okay. That's part of the system. It's just a single candle stop. If you are getting stopped out there, you get stopped for 25 points, right? So shit, we lost 25 points or so because we tried longing this. Now maybe it actually broke the high. Actually, never mind on that. So if you long this, failure to go lower, breaks the high, and then you get stopped out. Okay, so we're stopped for 25 points. Now we get another bar here. Look at this one. This actually broke the previous low and then closed green. So this actually looks really strong. This is a much stronger reversal bar to begin with. This does have high volume on a small spread, but I'd say overall this isn't the best candle long. You're really looking for like the strength to come in on these bigger candles. So if you did long this, it's okay. If not, and you're waiting for something stronger to print, then that's fine. And then that would probably help you a little bit more too. So you get this green candle right here on even more volume on a break of the low, and then you get bought up and close right at the highs. To me, that is a much stronger reversal pattern or candle than this little small doji. So that one you would long a break above the high and a stop under the low. So your stop on this would be about 44 points. And then you would want to target, the next level up. And so if you did that, even though you lost on this previous one, as you start to go up, 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 you're making 69, 70 points or so, and you're making back your whole loss here. So that's what's nice about the system is even though you may lose on some of the prints you get on some of the signal candles, you're going to make it up when the actual signal candle that ends up working works out. And it looks like we're breaking down here finally on the day. Man, I wish I caught that. So notice here, like you get a pullback. This is a pretty good example as well. You're getting a pullback here, right? You get some blue bars, but they're not at levels. I mean, here's maybe like a blue bar. This is a failure to go lower, so maybe I'd long that if we get to the upside. But we never break above, so it doesn't trigger. Here's another blue one. This isn't at a level though, so we don't really care about it. And then you get this one here. But if this was at a level, you would be looking to long the high of it, but the next candle doesn't break the high, so you don't care. Then you get this blue bar that happens at the level, failure to go lower. It broke the lows of the previous candle. Now we're looking long above the high. You take it above the break of the high, and you get a nice little trend up. It almost hits the level, but this level's been pretty used. 1, 2, 3 times, and now we're breaking it on the 4th try. So that is kind of that. So here's a good example too. Pull back red, blue bar at the level, along the high with a stop under the low, and you're off to the races. So that's kind of how to use the indicator. This would have been another good short here as well, where you hit the level first. This is the 5-minute. You get a red bar here, but your next level is right here. So this doesn't make a lot of sense, I think, to short. You're risking this whole candle just to go down here because you're going counter trend, right? So it doesn't make a lot of sense. This one looks a little bit better where you form like a double top, you kind of push a little bit higher, and notice the rejection is on really high volume here. So you reject on high volume. You get the red candle that engulfs basically the 2 previous ones. And then you would short here and target, maybe this level, but maybe the next level here. So if you did short this candle right here, the low of it, with a stop above the high, you did have to hold through some shit. Now you could have taken profits down here. I think that would have been reasonable and a much better trade than here, where you're already halfway to the next level. This one's a lot closer to this level. So you would short that, and then you're looking for the next level, and then possibly the next level below. So you did have to hold through some, but you never broke the high of this candle, so you would still be in it, and you'd be good. Let's see what it looks like on the 3-minute. So the 3 minute actually looks a little bit better for both of these. So this one is a nice bear reversal bar right at the level. This one looks a little more reasonable to target. You know, you're getting at least 1-to-1. Now you really want more than that, but you would short the low of this candle down to here and take profit. Here's another one. This is a pretty high volume reversal. You can see the relative volume on these candles is super high. So you push past, looks like a breakout, low volume here, and then a reversal. So you would short the low of this candle, and the risk to reward is just much better than the 5. So on the 5 minute, let's see what we get. You would short the low with the stop above the high. So you're risking 55 points, and your first target is about 52. So that's a 1-to-1 trade. So that's not too ideal, you know, unless you're looking for a reversal all the way down to the next level. Now that makes a lot more sense. That's 2.64. You're targeting 146 points and risking 55. Now we go to the 3 minute, which I think that's what I like it on the most, is the 3, because your entries are a lot more precise and your stops are a lot smaller. So you get your bear bar here, high volume, rejection at the highs after a big run up. I think this was like 300 points up. So thinking, okay, this may be the top here. So this time you'd only be risking 25 points. And even if you just targeted the next level down, you're getting 81 points. So that's a 3.25 R trade. That is much better than the 5 minute with a 1-to-1 risk to reward. And then if you target down here, if you held for more, this is like a 7R trade, and it looks like it's going to hit. Currently, it is at what? If you held this, you're at a 5R trade. So if you risked $100, you're up $500 at the moment. Okay. Now you did have to hold for a while, but your entry after the entry and the next candle up, or the next candle that happened that failed to go higher, you were in profit the entire time. There's really no stress. So I think scaling some here makes sense at the next level because you are going counter trend, right? So you counter trend traded this run up into this level. You're taking profit at 3R, and then you're moving your stop to break even. And if you did that, you would still be in this trade, and now you're up, you know, 5R or whatever it is. And you're probably going to get to the next level. I'm guessing somewhere down here, probably 12,700, maybe a little break below it. Yeah. So that's what I would recommend. I also use these on like the daily time frame to get like daily signals. I think are great. So you can see failures to go lower on the daily time frame, like here, failure to go lower. After the red bar's down, then you get some green bars up. So this can help give you maybe not a bias on the day, but kind of a long or short to look for on the day. Here's another one. You get a run up green. You get a hanging man at the highs. So maybe you're looking short the next day. Next day happens. Now you get a failure to go higher. So you did break the high. So this could have been a rally-based rally, but you did break the high and then failed to go higher. So the next day, I'm probably looking short, right? And then the next day, look at that. You get a huge sell-off from 11,480 to 11,100, you know, like 300 points. So this is something to help you out a lot. So kind of on this bull trend up as well. Here's another good example. Bull trend up. Here you get this bear bar down. Maybe you get some follow through on the next day. But after the red bars on the pullback, what are we looking for? You're looking for a green bar up. So once this prints, now you're thinking, okay, the bull trend is back on. We're going to be looking for longs the next day. And there you go. You get longs. Here's another one. Pullback, red bar to blue bar. Blue bar has that failure to go lower. So the next day, all right, we're looking for longs. There you go. So I think this can really help in terms of showing trends on higher time frames, showing failures to go lower, failures to go higher. It can also show chop really well. So chop is usually seen as an outside bar, inside bar, failure to go lower, failure to go higher. So like this was just pure chop right here, right? So that's something we'd want to avoid. Some good examples of like downtrends forming. So you're in like a downtrend here, right? You get your pullback on green. Now you're looking for a red or a blue bar. You do get this failure to go higher blue bar right here. Now we're looking for the low of that to break on the daily to look for shorts intraday. And now you get your red bar down intraday the next day. I'm sure there was opportunities to take shorts here. So I think it's a super useful indicator. You don't have to keep it on all the time, but if you want to keep it on for like, I mean, I like looking at the daily time frame with it. Maybe even the weekly too can show a lot. So here you get, you get your pullback on red. Now you get your green weekly, and then the next 3 weeks are green. So yeah, I think that can really help. Here's a choppy 3 weeks run up. You get your failure to go higher on the weekly, and then your next 2 weeks are straight red. Or you get your trending down, down, down on the weekly. You get your pullback on green. You get your high volume bearish engulfing candle red right here, and then you just keep dropping. So I hope that helps. That should make sense for everybody. Let's see what we're doing here. So yeah, you're still dropping. Notice that you came up on green, you got your blue here. Wasn't quite at the level, but you might have had a little zone right here. And then if you shorted the low of that with a stop above the high, I mean that was a really good trade too. I actually wish I caught that. I was gonna making this damn video. So this is a risk of only 20 points, right? Even if you targeted down here, this is like a almost 3-hour trade. If you thought you wanted to go for it, go for the gusto. You're getting this is a 6-hour trade right here. So the key to this whole thing is trusting your levels to work and then trusting the bars to show you when you're getting in on a failure to go higher, failure to go lower, or just a reversal based on green or red, right? One thing I would recommend is using this on the 3-minute for the first like 2 hours of the day. So from like 7:30 to 9:30 my time is when I would probably use this. And then once you get to the middle of the day when price is a little bit slower, then I would say switch to the 5-minute. So like you probably would have used the 3 up until up until here probably, and then you switch to the 5. So because like on here on this slow action, notice you get your blue candle on the run up. If you shorted the low and then stopped out, if your stop was really right at the high or just a tick above, you would have been stopped out here. But on the 5-minute, since the candles move a lot slower, your stops are still pretty reasonable midday. Damn, and look at that. We're almost hitting the level. I wish I caught that. So you get your blue bar here. You could have longed it again. And then you get your blue bar here on the pullback all the way down to your next level. So I hope that makes sense. Damn, look at that. And you hit your level. Literally perfect. So that should make sense for everybody. I hope it helps. If you have any questions, please reach out. If you need the code for the indicator, this is exclusive to the Discord members. If you do want to purchase it or anything and you're not in the Discord, I think we could probably make that happen. So just reach out to me if you want it. If it doesn't make sense, yeah, but I think it should really help and should give a lot of great entries for a lot of trades. So thanks for watching, and we'll see you later.